Impact investment through real estate. That's what the Steinbridge Group is doing. We'll break it all down with its CEO, Tawan Davis. Hello, everyone. This is Jabbar Young here at the NASDAQ market site. And I'm proud to be joined by Tawan Davis, the CEO of Steinbridge Group, a privately held real estate investment and asset management company. They made a big announcement with us at Forbes BOK only a few months ago, and we're going to break down another announcement. Thanks for joining me, sir.
Sure,
Happy Black History Month.
Well, thank you.
Yeah,
Same to you.
yeah. So let's start there. Black History Month is easy to say which figure, right, you always remember, and I think we have the notable ones. I'm going to say which black business leader in Black History Month stands out when I say that.
Powerful question. I think that Earl Graves is a very impactful person given the time in which he emerged. Earl Graves' business grew in the context where that was unusual for African American business leaders.
Right.
And he was talking about business. He was talking about commercial opportunities. He was talking about market empowerment. And then his business became the defining Black enterprise today remains the defining voice for African Americans in business.
Yeah.
And years after his passing, people still celebrate that Black enterprise as a institution and a media mechanism, and it still continues to thrive today.
Yeah.
And so I think that he stands out for me as an exceptional leader in the business world.
That was great, absolutely. Listen, Reginald Lewis, right?
Sure,
I mean,
absolutely.
on the cover, it made Forbes cover.
Absolutely.
But the second day of Black History Month, here you are making an announcement, right? A $40 million investment to Virginia Union that is aimed to unlock 100 plus or 100 acre real estate that they have on Virginia's north side, Richmond. And this is part of a bigger, larger commitment that you made at the Forbes BOK Summit back in November. Thank you for that. $100 million commitment to HBCUs. Let's break down that commitment, the $40 million, which is the first iteration of the $100 million. What's it going to do? What do you anticipate? Break it down for me.
Sure. Well, let me start. Thank you for having me, and it's good to be able to chat with you all again. Let me start talking a little bit about who we are and what we do.
Yeah.
So the Steinbridge Group is an impact investment firm. Our goal is to activate real estate as the first mover of impact.
Yes.
There's been a lot of discussion around what impact investment means and a lot of response, positive and negative, to the idea. Our thought is that impact investment is in fact the most keen way to address what are both economic, social, and governmental opportunities and challenges.
Yeah.
The best business models come from addressing challenges and problems. If you think about today, we don't burn gas, we don't burn oil in order to turn on to get light.
Yeah.
Right now, electricity solves that problem for us. It is in fact an ESG response. And so our view is that some of the best opportunities to build strong businesses with a market response are in the impact sector. And so those businesses, we believe, also provide outsized returns to investors and opportunities. And so for us, it's not a subsector of business, it's not a subsector of investment. It actually is investment. Investment that has any business strategy that has an impact, we believe, is impact investing. And so our thought, we also believe that that private capital needs to address and solve many of these challenges and opportunities. There is a limit to public and sometimes governmental intervention. And so the opportunity to provide private solutions, market-based solutions to economic, social, and governance issues is the very definition of impact investment, which is why over the next 10 years, people are expecting impact investment to grow to be a $5.2 trillion market. And it's one of the fastest growing subsectors of investing today. And so our firm provides real estate opportunities for impact investors in that way.
Yeah. When you say impact investors, right? I mean, I'm curious about the real estate portion of it. What other sectors, does that fall under?
Yeah, a lot of folks think so. So broadly, impact investment is defined in three categories: environmental, social, and governance. And so if you think of electric cars are really believed to be an impact investing, green energy, environmental. So anything that has a positive impact on the environment, anything that solves social issues. So for example, a lot of our investing is in the residential space. Why? Is because America is chronically underhoused. More than 50% of Americans spend more than 30% of their income on housing. That means that they are housing burden. It used to be that it would take 2 years to buy a home after marriage. Now it takes upwards of 11 years to buy a home after marriage. And so Americans are dramatically impacted, even though interest rates are at highs that we haven't seen in a generation. That we know that over the last year, home prices are up. And so it's making it even harder for people to acquire homes. Basic economics, basic finance would say that the higher the interest rate, the lower the housing prices. But in fact, housing prices are up anywhere from 6 to 8% despite record high interest rates. And so the housing problem is a social issue that we believe can be addressed with a private capital solution. And the last category is governance. So anything that has to do with international affairs, international law, international conflict, business governance also comes into that area. So ESG is synonymous with impact investment, standing for environmental, social, and governance challenges that can be responded to by private investment.
Yeah. And I would think Steinbridge falls under the social part of that. Right?
So much of what we do falls under the S for social impact, and that's where the real estate falls in, and particularly providing attainable housing for working families is where our approach to impact investment emerges. We also are very attentive to the environmental portion. So we focus on opportunities to build in green homes. So we do solar energy, and we try to pay attention to how we source our materials and how we build our communities. And so, our primary focus is probably on the S for the social through real estate, and the second is on the environmental, how we build and deliver those homes.
Yeah, absolutely. Taking back right fast to the Virginia Union,
sure.
That particular investment is $40 million, and you're going to develop again these areas that around that particular HBCU. And I'm assuming building new homes, refurbishing ones that are probably there. If there are there, I haven't seen that area. Is that where this money is going to be going?
That's right. So again, when you think of impact investing, one of the ways to think about it is who do you invest with? Where do you actually put the dollars? There are 100 plus historically black colleges and universities in the United States. And they historically receive 30% less funding than their counterparts. If you put all of their endowments together, they have 1% of the endowments of all of the Ivy Leagues. And so what we're finding is that we thought that there would be an opportunity to direct investment toward these institutions that often are very, very large landowners, but have limited cash and capital resources and opportunities. So partnering with them and to activate their land to economically productive uses. And so this isn't necessarily dorms, this isn't necessarily academic housing or other institutional uses. We're trying to identify ways to bring ancillary and additional income to income streams and to increase and bolster their endowments. So
while making the universities the centerpiece of it.
Exactly.
Right.
So by the way, these universities have been the centerpiece of their communities for generations.
Yeah.
Most of the historically black colleges were started in the antebellum movement immediately after the Civil War, around 1865. And so they were started to respond to 4 million freed folks who now needed to be educated.
Yeah.
And so they were started in that era. Virginia Union University was among the first. In fact, Virginia Union was started as Richmond was being vacated by the Confederacy.
Yeah.
So in 1865, Jefferson Davis vacated Richmond, headed south as the Union Army came in, set Richmond afire on his way out. And while it was burning, Virginia Union University was started to educate future teachers and ministers in the Virginia area. And so we thought it was very appropriate to start with him as a leader in the HBCU movement.
Yeah. And the Steinbridge Group, this is the investment firm, this is a build to rent strategy, right? And this the family rental rehabilitation, you have the urban infill. Break that down for me,
Sure.
the entire strategy, starting with the build to rent, because here we're allowing families, right? And society's so strange because on the one hand, there are people out there who would love to own a house, but then there's a whole new generation out there who may not want to be tied down anymore, right? And so renting is starting to become a little bit more, I think the negativity is kind of driving now. Yes, you want to create wealth and maybe in time you will buy a house, but right now when you're in your 20s and your 30s and you're moving around from one to the other, you're renting and you may not want to be tied down to a mortgage, especially in this interest environment right now. Is that what you're kind of looking at and how you plan on making your profits?
Yeah, so, Virginia Union, again, is a great example.
Yeah.
They have 100 acres, and we are committing approximately $42 million to activate underutilized assets in that 100-acre ownership. And one of the primary opportunities is to build homes for rent in that area. So if you take all of American renters, somewhere around up to 63% of renters are actually renting a house, not renting an apartment building.
Yeah.
So when we think of renters in the United States, we think of apartments, but in fact, almost 2/3 of renters are actually renting a house, not an apartment building. Second is that if you take all of the investable asset classes in real estate, single family rental is the single largest investable asset class. It's about $4.5 trillion.
Yeah.
Apartments are anywhere from $2 to $3 trillion. And so we cannot address the overburden of rent. We cannot address affordability without having a strategy to address single family and build to rent housing. And so that's kind of where we follow the idea, is that in order to have a meaningful impact on working families that need places to live, that are overburdened with rent, you actually have to deliver not only apartments, but people are now starting their whole families in rental units. And so we have to deliver homes as well.
Yeah, I was in Texas, Dallas, Texas, just last week, and I'm driving around the Plano area because I'm in search of a house too, Tawan, and I'm seeing, all I see is lease, lease, lease. And I'm like, where's the buy? I want to buy. And it's lease, lease, lease. And I'm assuming it's because people are locked out, but they still want to maybe get involved with the housing, and maybe that's a way to do it. Take me back a little bit, man. You're from Portland, Oregon. You grew up there. I love Portland. I lived there for a year. I covered the Trail Blazers for Comcast Sports. Are you a Blazers fan by default?
Well, you know, it's interesting. My family moved to Oregon in the Great Migration.
Yeah.
So when everyone else went from the South to Detroit to Philadelphia to New York, my family moved from Arkansas, where we were sharecroppers, and we had been slaves in Mississippi, and we moved to Oregon. And they took what I call the L route. So they drove west across Texas, and then up the I-5 corridor to Portland, Oregon, and we've been there since the 1930s. And so I'm a proud Oregon person. People always are. There are black people in Oregon. Well, we were
of course,
Of course there are, tons of them. So,
there's not a lot. There's not a lot, but you know, and listen, when
right.
I was up there moving around, I had to get used to it, right? And you have to kind of check yourself and understand that, you know, this is just what the demographics are. But I love Portland. I lived in Beaverton. I love Monument Falls, Screen Door, Fire on the Mountain Wings. Don't get me going about Portland, Oregon. I loved when I was there, and I saw it way differently. But when you were young, at 15, you saw it differently. What did you see?
Well, it's interesting. I didn't meet anyone whose family and grandparents were from Virginia or South Carolina until I went to college. Everyone I grew up with, their grandparents were from Arkansas. There's a great book about the Great Migration called The Warmth of Other Suns. And it tells the story of how African Americans moved after the First World War from the South to the North, populating the cities. And there was a great section in the book about Arkansas and how it moved to the Northwest and how people moved in large numbers. And so for me, I grew up with some remarkable people. My grandmother, my great-grandmother, probably had an 8th grade education. But when she moved from Arkansas to Oregon, she and her 3 sisters each bought 4 or 5 houses apiece to house the family as they moved north, because there were no extended stay opportunities and their hotels were often unwelcoming. And so they had to house their own families in the migration. And so they basically built the community that we live in today. What is impactful is, in fact, generations later, particularly after the 1968 riots, then you had the drug problem of the 70s and 80s, you had gangs in the 80s and 90s, and the communities began to deteriorate. And so after they built these communities, they unfortunately lived to see them deteriorate over time. And then what began to happen in my lifetime is the very communities that they built and then deteriorated began to gentrify. And so I go home now, and my great-great-grandmother's home is worth about $1.5 million that she bought for $30,000 in the 1940s. And my family and people around us are beginning to be displaced from the communities that they've lived for generations. And so another reason why we are partnering with institutions that are well positioned in these communities is because we're building a bridge to these transitioning neighborhoods so that people aren't necessarily pushed out, so that they're not necessarily displaced, but that they can live and work as these neighborhoods transition and benefit from that change.
I know you were seeing a lot at that age, but what did you want to be at age 15? Because you couldn't have said, I want to run a private equity investment firm. What did you want to be at 15?
I tell the story often about when I asked my grandmother when I was about 14 or 15 years old. My family's deeply religious. There is a scripture where the Bible says the cattle on 1,000 hill belongs to God. And I told my grandmother, I just want 1 hill. Matter of fact, if you give me 1 cow, I can make a difference. And so for me, I've always had the idea that I wanted to be do something impactful. I wanted to be in business. I've been asked to run for Congress twice. My father's a minister. My grandfather was a minister. I could have gone that route, but for me, I thought that creating opportunities for people through business would be the way that I would be able to have the most lasting impact. And so I've been pretty focused. I studied economics in undergrad. I went to sociology and economics in grad school, and then went to business school, kind of in preparation to be able to run a business that I could build that was both legitimate as an investor, but could also provide an impact.
So you know, wanted to make an impact. So no fireman, no basketball player, no police officer, none of that. You just knew it was something you wanted to be impactful.
Well, it's interesting. Funny that we are starting with Virginia Union. I was 11 years old, and I remember reading maybe Ebony magazine, or and it was Douglas Wilder was elected the first African American governor of any state in the United States. He happens to be a Virginia Union alumni. And so in my life, I have just looked up to figures, Douglas Wilder being one of them, that had an impact in ways that were outside of the norm. So I wasn't sure whether it was going to be a fireman. I wasn't sure whether it was going to be a minister, congressman, or businessman, but I was always targeted and trying to model my life after people that I saw that were having an impact in ways that were outside of the norm. And so that's been my focus.
Absolutely. If you had to go back to yourself at business school, what was the best piece of advice that you received in business school?
That everything's going to be okay.
Everything's okay.
Yeah, that everything's going to be okay. I mean, all business, all of our professional careers have their ups and downs. You're going to have some good days and bad days. Some years you're going to do well. Some years you're going to do poorly. You're going to get some good reviews, and you're going to have a boss that you can't stand. You got to stick with it. And you got to focus. And that the number one key to success actually isn't skill, and it isn't even brains. It's actually focus and perseverance.
Absolutely.
And that is so clear to me today. And all of the young people that I deal with, and I've mentored, I was an adjunct professor for some time at NYU, and I tell them all, the number one skill isn't how smart you are. And frankly, it's not even all the time how hard you work. It is focus, and it is perseverance.
Focus and perseverance. We've got about 3-4 minutes left here. I want to get your insight on some macroeconomic stuff, right? Start with the commercial real estate sector. I mean, this is a sector right now showing signs of trouble. The New York Community Bank took some losses on commercial real estate, obviously, with the pandemic now. Post-pandemic, people aren't going back to work as much, so a lot of commercial real estate, people are concerned about that. You got about $1.2 trillion of commercial mortgages that are scheduled to mature this year, according to Goldman Sachs. Barry Sternlicht of Starwood Capital, he comes out and says, I quote, "The office market is an existential crisis right now. It's a $3 trillion asset class that is probably worth $1.8 trillion now. There's $1.2 trillion of losses spread somewhere, and nobody knows where it is," right? There is prediction that this can cause another economic recession. What do you see?
It's interesting. When I started the company, we actually didn't start in impact investing for real estate.
Commercial.
We started buying commercial office buildings.
Yeah.
We bought and structured almost $1 billion worth of office building transactions, including the famed Watergate building that got Nixon in trouble. And so we have considerable experience in the office space. These headwinds existed prior to COVID. Right? There were three trends that we noticed. Number one, people were taking less and less office space, particularly in the major CBD markets, Washington, D.C., Baltimore, Boston, New York City. They were taking smaller and smaller footprints. Second, people were working from home more. It was starting with Fridays. It was starting with, maybe a Monday off. But there was a trend of working from home prior to COVID. And third, you have the WeWork phenomenon. WeWork is the most famous example, but these co-working spaces. So what was happening that new businesses and venture-backed firms weren't taking office space. Those three trends existed prior to COVID. The combination of COVID and very high interest rates and the maturity of the debt is accelerating what was already happening in the office space and what frankly has happened around the world in the office space. And so our sense is that America, like the rest of the world, is going to have to figure out how to repurpose some of its major centers. This is not just challenging for the office owners. This is challenging for the restaurant owners and the
cleaners,
people and the cleaners. I mean, this is a major economic.
San Francisco's an example, right? Detroit was gave you something. If you don't need to see a bankrupt city, and San Francisco's there, and hopefully they can get it together.
And then if you also think about the tax bases of these cities, often the city's tax bases are driven by commercial real estate activity, which is true for New York City, by the way. Much of New York City's tax base is in its commercial activity including commercial real estate, not necessarily in its residential tax collection. And so this is going to be a major challenge, both for municipal funding of schools and of police departments and fire departments, as well as office owners.
Yeah, cities might not be in business, they're not shedding workers, right? And then you got, cities that are just empty.
That's right.
Dan Gilbert has all those buildings downtown Detroit, right? And so, very interesting. And housing market, right fast, again, about 143 million homes, I believe you need about 200 million though, Tawan. What do you do there? Because construction workers aren't building homes. They're too busy building bridges and roads. I know, because it took me a long time to get here, traffic. What do you do when you don't have enough homes being built, but you need them?
Well, this is why, again, economics would tell us that high interest rates should bring down housing prices. The inability to supply new homes because of the cost of inputs, the high cost of labor, and high interest rates is going to continue to skyrocket home prices and home building prices, despite the attempt to manage them through interest rates. And so I think we're facing a real crisis. As you said, 143 housing units in the United States, 84 million single-family homes, and a quarter of those single-family homes are rental units. So a quarter of America is renting a house, and those prices are going up. And so I think that we just face a real long-term trend with increased housing prices in the United States, which is going to make ownership even more difficult, particularly because of the combination of those increased prices and high interest rates.
Get you out of here. Two things last. Forbes BLK, obviously you made that 100 million commitment. If you had an audience here who was real estate investors, right, what would you tell them after what we just said? Commercial, housing, is there a play in commercial? What would you tell a real estate investor that could be looking for an opportunity, for yourself?
I actually think that the challenges of today's real estate market creates the ideal impact investing opportunity to provide housing that Americans can afford. It is the crossroads of impact investing opportunity, where working families cannot keep up with the high cost of housing, and the ability for us to deliver that housing to the American people is challenged on multiple levels. And so I think the opportunity to partner with us or someone like us to deliver those homes and at the same time make an outsized return, given the cycle that we're in, I think exists for about a generation. So we're excited.
Absolutely. Last thing here, Good to Great, Jim Collins' great book. I love it. Teaches you how to go from good to great, especially in the business angle. What's the difference between a good real estate investor and a great one?
Good real estate investor and a great real estate investor is partnership. Because the idea that we can't do it alone, that you have to partner all along the way from your, you have to partner with your investors, you have to partner with your banks and lenders, and you all have to basically move and row in the same direction. And I think that is the difference. The real estate investors tend to be dramatically egotistical.
Aren't we all?
Dramatically egotistical. I mean, because you build stuff out of the ground, you start thinking about yourself as pretty freaking special. And the reality is that we can't move forward without partnership across the lines, partnering with people and with communities. And I think that's the difference between people who have sustained real estate businesses and people who just ride the cycles.
Absolutely. Here at the NASDAQ market site, Tawan Davis, thank you so much, man, for the time. And thank you for making an impact through the impact investing. Look forward to seeing where the rest of the 100 million goes. I know you got some more announcements coming. And listen, we were just talking Philly off the camera. So you're doing work in Philly, New York, Atlanta, all of that. Look forward to just keeping up with you. I appreciate the time.
Appreciate it. Thanks for having me.
Appreciate it.